Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just let me know that it is indeed working. Hope everybody's had a fantastic afternoon. Also, just want to give a shout out to those watching this in the recording or on YouTube. Just want to say hello to you guys and welcome you to participate in this webinar in any way you can. Feel free to ask any questions you have in the chat box live. If you're here live, if you're watching this in the recording, feel free to ask those questions in the comment section down below, and I will get to those comments as soon as I can. But let's go ahead and get started. Before we get started, I just want to introduce the topic. So today we're going to talk about smart money concepts. Had a couple of people send this request in. So I'm looking forward to discussing just the basics of smart money and how to trade liquidity and just kind of break things down that way. So this should be a pretty good webinar. Typically, these webinars go anywhere between 20 and 40 minutes. So we'll go as long as we need to go. I'm assuming this webinar will at least go about 30 minutes to cover everything I need to cover. But we can go as long as we need to. So if we have a lot of questions, we can do that. If we don't, we'll just go 30 minutes just to cover the topic. But let's jump into this. As always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's talk about smart money. Let's actually go and look at the charts. Let's pull up a currency pair. Let's just pull up something basic like the euro dollar. Yeah, pretty common currency pair. And let's talk about smart money and what smart money is. So I'm not exactly sure who coined here. 1 second, guys. I'm switching between stocks and currencies right now. Okay. So I'm not exactly sure who coined smart money. There's a lot of different people and places that trade smart money out there. Let me fix this. Why is this doing it this way? There we go. But while I'm getting this all set up, let's talk about smart money. So smart money concepts in its basic form is you're basically looking for imbalances in the market with smart money. Imbalances have to do with where liquidity is trapped. So this basically means as the market moves up and down, let's reload this. I'm not sure why I think it's because I switched between stocks and Forex. I was just doing my stock trading just a moment ago. And so now I'm switching to Forex. Okay. Hopefully this works now. We can just use this chart. That's fine. So basically you have imbalances and places where liquidity is trapped in the market. So the market has consolidations and you have expansions. Okay, consolidations and expansions. The market moves from one consolidation to the next, and from one expansion to consolidation to expansion, and so on. It is never ending movement of the market. And in the process, when the market makes an expansionary move, when it moves up quickly or moves down quickly, what that ends up doing is it leaves in the dust a lot of people who have trades. And some of those people are fortunate and had, like, let's say a buy order and the market goes up. Well, that's great. They're happy to have that buy position as the market's going up. But if the market goes down and it expands lower, and you've got people who are in buy positions, that's trapped liquidity. And that's a concept we really want to discuss, because when you have trapped traders and banks, it provides huge opportunities with great risk to reward ratio. So let's kind of break down the basics of what smart money is. So there's actually a cool indicator. Actually, we'll introduce that indicator in a minute. It's the Lux Algo Smart Money Indicator, but let's break it down.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve Scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So here is just a market. This is the Euro Kiwi on a, it looks like I'm on a 5-minute chart. Like I said, it doesn't matter what time frame, doesn't matter what currency pair or stock or indice that you're looking at, doesn't matter. But basically what you want to find is a market like this one. This is good, where you've got a lot of consolidations, like right here. You've got an expansion. Here's another expansion, consolidation right here, another expansion, more consolidation over here, and so on. So you've got this progressing market. Okay, so what happens is, like I said, you have here, let's see if I can find yeah, let's actually just use this right here, this area. This is just fine. Okay, so a couple of things. So in the market, like I said, you have this consolidation. Here's a kind of a general consolidation area. During this consolidation, we formed a resistance. Okay, so you got resistance right here. You definitely have some support down here. It actually even looks like there's a support level kind of in this area too. We're not going to label that one, just know that there is. These support resistance levels often form during not during expansions. They form during consolidation periods, right? So you have consolidation and you have another consolidation, and then you have another consolidation or another resistance formed in this consolidation. Okay. Right. And then you have what we call a breakout. That's easy to identify because you have a market that was in consolidation and then it chose to leave consolidation and went into expansion mode. Now, when this market goes into expansion, what inevitably happens is you have traders who are now trapped, who were selling. Let's say they were sellers in this area and the market now goes up. Now they're trapped. So if they're ever given an opportunity to exit their position, they're often going to take that opportunity. Okay, so one of the things I can just notice right off the bat is after this expansion, the market pulled back, and look where it pulled back to. Pulled back right to here. Like this is the low it made, right there, and it basically came right into a zone of expand, or right as this market was making its new expansion. You can see there's a little consolidation or a little back and forth movement that begins right there just as this market continues its move to the upside. There's also some other areas worth looking at, like maybe this area right in here, a little bit of an area of support slash we call that liquidity. I'd also call this area right here a liquidity zone because that's a last consolidation before a major breakout. So that would also be considered a liquidity zone. So there's a lot of little liquidity zones in here, but basically what the concept is if the market breaks out that sends a message to all the traders, both long and short, that the market's now trying to make moves to the upside. So if it pulls back, the sellers will then use that as an opportunity to close out of their position as close to break even as they possibly can. And the buyers will use it as an opportunity to get back into more to back in to send this market even higher. And that's actually exactly what happened. It came in, made another consolidation inside of liquidity, which is basically all of this inside of here. We'll call this entire, in fact, we'll just call this entire zone liquidity, because it basically, this whole zone is liquidity, but we can call this specifically a liquidity zone. We'll call this one some liquidity, and we'll also call whatever this is right in here as liquidity. So those are all, and basically the whole thing is, so those are places where if you're a buyer, or excuse me, if you're a seller, you'd want to get out there because you believe that the market's probably going to go up as soon as it gets to that point. And that's exactly what happened. It basically pulled back into this liquidity. It was bought right back up, and the market then went up from there. So this is a great example of what I was talking about. Now, actually, let's put that back. We call this breakout right here. This is called a break of structure. So we call it, I'm just going to label this a BOS because this is a break of structure. Now, one thing I want to note when you're studying smart money concepts is the first break of structure in a new trend is what we call a change of character. Okay. Change of character. And this was a downtrending market, wasn't it? I would say so. This was absolutely a downtrending market. Okay. So now that we have a change of character, usually those are a little bit more powerful than a, well, so we call it a CHOCH, a change of character. Those are often more powerful than a break of structure, because when you get a change of character, that usually means that the market is at the cutting edge of a new trend. That's not always the case. In fact, I actually have a bias to sell this week. In fact, let me look at my scanner real quick, because I believe that I have a sell on this for the week. So this may be just a premature move. Let me take a look. I can't remember what I'm doing on the Euro Kiwi. I believe it's a sell. Let me take a closer look. Sorry, guys, my computer and internet's being a little bit slow this morning. I've got like 6 different trading platforms running right now, so apologize, but yeah, here we go. Let's pull this up. Let's see, Euro, Kiwi, and I believe it is a sell this week. Here, let's just filter it this way. Yeah, oh yeah, it's a strong sell. So I am looking to sell that this week. So this, like I said, this could be a premature move. It could be just a short term. I mean, this is a 5-minute chart. It's not like an overall trend move, but it is something to be aware of. Um, but that's besides the point. What I'm trying to teach here is just a smart money concept style of trading. Okay. So what would be a break of structure? So as this market moves down, like right here, so this is a structure. We have a nice, basically support level right here. You've got this support, and then you've got this support, and then you have a break of structure right here. Okay. Now we call this one a break of structure, not a change of character, because this market's already in a downtrend. It's already pushing lower, as you can see. So this is just a break of structure, just a simple break of structure. It's not a change of character. And it doesn't mean it doesn't work. It just means you're trading more of a trend, not so much a counter trend move. Okay. Change of characters are often more associated with the brand new trend, which is coming off of a counter trend opportunity. And as this thing pulls back, what you want to do with these is you want to find out, where did the market create liquidity? And how do you do that? You go back to the previous consolidation that created such a powerful move? Because ask yourself this question: who can create a move like this? Can retail traders create a move like that? That's significant and impulsive like that one? No. Retail traders don't have the ability to create such a powerful move like this one. Only banks can do this. And because only banks can create such a powerful move like that, then we basically need to look for trading opportunities in the direction the banks are going, right? So this is the last area of consolidation. So there would be liquidity naturally trapped up in this area. So that would be not a bad place to actually take some sells and have some sells ready to go, is up in there, which I'll probably end up doing because I do have a sell bias overall from the scanner this week on the Euro Kiwi, right? Anyway, so that's a break of structure. Let's actually pull up. This is a good opportunity now that I've kind of introduced it. Let's actually pull up the Smart Money Concepts indicator by Luxalgo. It is a great, I think it's the most used indicator on, yeah, this is it right here. This is the most utilized indicator on all of TradingView, I believe. Correct me if I'm wrong. Somebody, somebody watching this on YouTube, tell me if I'm wrong on this, but I'm pretty confident this is the most utilized indicator out there. Okay. Um, it's pretty amazing actually. So this is just this, it's free and it's called Smart Money Concepts by Luxalgo. And they're actually calling this a change of character right here instead, and I'll explain why. But basically, and it's not perfect. I just want to show you that. So they called this a change of character right here because it did break it above this high right here. So they called that a change of character. So it's not perfect. And that's actually where the scanner can come and help you, because the scanner is able to look past the technical analysis and have more of a fundamental approach. So that's what I feel like there has to be that balance in trading. Like you have to be able to um like so much of trading is not just technical, which is more like your chart analysis. The other part of trading is having uh fundamentals. So you have to kind of know which currency pairs are more likely to go up or down based on a fundamental standpoint. And then you've got your technical analysis, which is also like looking at the charts a little bit more detailed, right? So, for example, this Lux Algo indicator gave you a change of character, suggesting that this might actually start going up. And instead, it actually went down. And I think a fundamental analysis on the Euro Kiwi could have helped you actually stay clear of that direction. Um, so since I already have a fundamental bias to sell the Euro Kiwi right now, I would actually look for more opportunities to sell, um, because that's generally what I've been trying to do. Okay, so where's the most recent change of character? So we had a change of character right here. So after a change of character, which is also known as a break of structure, it's just the first break of structure in a new trend. So right there, now everything's just a break of structure on the way down. So you'll notice down here, let's see, do we have any BOSs? Nothing very clear cut. Um, we do have a strong high right here, which suggests that it'd be very hard for this market to break above that high. I think that's actually a good analysis. Let's actually go back. Let me try to find you some more examples. Wow, yeah. So here's the change of character right here. So this change of character, after that change of character, it was all breaks of structures from there on out. So you have change of character there, that's the first one. Then you have a BOS to the downside. Then over here you have another BOS to the downside. And these are all BOSs all the way until here at this one. So we're just continue to break below each previous low up until this point right here. And then even then, that one was just a false break. and then it continued even lower, which is kind of interesting. Let's go look at something like, I don't know, maybe like let's do US 30. So here's US 30, and let's do the same analysis. So let's kind of look at this. This has been in a uptrend for the most part. Let's see, for the last little while. Yeah. So let's start here. So right here, you've got a change of character, change of character. That's usually the first move to the upside in an uptrend. And again, usually those are more powerful. So after this break of structure, the market then pulled back and it came back right precisely to the same area that created that break of structure. So the whole idea with smart money concepts is to buy in to the consolidation that ultimately created the break of structure. In this case, it was a break of change of character. So this zone, like I said, whatever happened in here, the banks were able to create enough liquidity and a bounce to the upside sufficiently um, to create this move. And then when a market pulled back, it came in and tapped right back into the change of character. And then from there, it was just off to the races, right? Let's look at more of these. So here's a break of structure right here. So you have a BOS right here, and the market broke that structure right here. Okay. So now the question is, what created this break of structure? Well, I would argue that pretty much this whole area, like everything that took place inside of here, is what created the ultimate move out of this structure. So naturally, if the market were to pull back and tap into this area like it did right here, that would be a good place to buy back in, which is exactly what happened. Okay. Let's do that again with US 30. So right here, you have another break of structure right here. Okay. And it broke. They're saying it's right there. They're saying that that's a BOS. That's fine. And you actually have a nice little flag pattern built in right here. And this is precisely what created that break of structure. So whatever orders were placed in this area is what ultimately led to that move and break to the higher. So naturally, if you can get a market to come back down to precisely this area that created that move to the upside and that break of structure, then you'll get a good trade. And that's, again, here we are again, nice move to the upside after that BOS. I feel like this works really well on indices or gold, silver, just because I feel like the NAS 100, US 30, gold, silver, it seems like the trends seem to stick around a lot longer on on those instruments before they reverse. I feel like Forex can be very fickle that way. Not that it doesn't work, it's just a little bit more difficult on Forex pairs, in my opinion. Okay. This one's kind of interesting. Let's actually point this one out. So you have a nice, this one didn't point out a BOS, but technically this is a BOS right here. Um, for some reason, their algorithm didn't say that that was, but it is. This is a break of structure. And this is precisely what created it right here. Whatever this is created that move. So this would probably be a good place to place a buy, is right in this area. But it never got back to this. Notice how this one actually came down and retested that resistance or the actual break of structure. I've seen that happen many times. So sometimes you can actually get pretty good trades just by placing limit orders right on the break of structure itself rather than looking for the liquidity. It's not always going to work, but sometimes you can get, like in this example, good trades out of it. This is a false move right here. This can happen with these guys. They called this a change of character right here. Okay. Um, and the reason why they called that a change of character is because it's the first break of structure to the downside. And this has been in an uptrend for a while. So again, I think if you're just trading pure smart money concepts, you're probably going to be very frustrated. Okay. You'll be frustrated with a lot of trades if you're just going straight smart money or technical analysis. And the reason why is because if you don't already have a bias from a fundamental standpoint, you're going to place just every trade you possibly see. And I think it's better. And this is why I built the scanner is it's designed to give you a bias that's aligned with the fundamental side of the market. So if you can trade smart money that's aligned with the fundamental side, then you're not going to take this sell trade, because if the overall signal is to buy, then you're going to be focused on taking buys instead of sells, which is very, like I said, very, very helpful. So that I would consider that a false breakout. Now, something to notice right here. Notice we have another change of character. Not that's one right there. This one is now a change of character because it's the first break of structure and what they call a new trend. I would say it's just a break of structure because it was in an uptrend this entire time, but they're saying that it is a new trend. I think it was just this way the entire time. But that nonetheless, there's a break of structure right there. And notice how this market literally comes down and taps into the very area that created this move. Whatever happened in here is what created that impulse, right? Totally. Whatever happened here made this move. And look how this market came nicely and tagged right into that liquidity. That is the essence of smart money right there. Because what's inevitably happening is you've got a bunch of sellers who are trying to get a better price to get out of their bad trade. And so as this market pulls back, they're all going to get out of their trade. And when a seller gets out of a trade, they're subsequently buying. And so you have all the buyers who are still in their trade. And then you have all these sellers who are exiting their sell. And when a seller exits a sell, they're buyers. Okay. And that's what then inevitably sends us up on another massive breakout. Pretty cool, right?
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Now, this is a trend change because here we are now. So this one actually is a true change of character, right? Oh, this is so cool, actually. So you did have a change of character here on US 30, right here, and you have a move to the downside. This one was pretty aggressive. And what created this initial move to the downside? So this is your change of character or break of structure right here. They're calling it a change of character. So basically, whatever took place inside of this consolidation, whatever happened inside of there, the banks were able to make a big enough order to cause this market to drop like it did, right? And so look what happened. The market came back up, tested that liquidity zone. This even just happened today. This is literally a trade from today, December 4th, 2023, on US 30. So the market came back up, tagged this area, came right up into liquidity, the very thing that created this change of character, and then boom, just came right back down. Now it's coming back up again, but that's fine. I'm just trying to show you the trading opportunity, the day trade opportunity that existed right here. I didn't take this trade, unfortunately, but that's really, really cool to see. That's exactly what this whole point is behind smart money. So you're looking for big impulsive moves. And so I've had a lot of people ask me, Steve, I see these trades after they've already happened, but how do you find them before they happen? So this, I think the secret or the tip I would share, the suggestion I would give is to follow the most recent impulsive move on any, could be a currency pair, could be an indice like US 30 or NAS 100, could be precious metals on gold or silver. If that's what you trade, it could be a stock, just anything that you enjoy trading. Go backwards and find the biggest, most recent impulsive move that also had a break of structure. And then that's, you can go backwards basically to find the liquidity zone. Okay. So I think that's a good way to find those. Um, let's actually go and let's do that. Let's actually do that suggestion on something else. Like let's go to maybe like NAS 100. Okay, so NAS 100. Let's kind of break down NAS 100 here. So um um yeah, let's go. Let me close all this stuff. Okay. So NAS 100 had a very big, actually two impulsive moves today. But you had this big move to the downside on NAS 100, and then you had this move back up towards the end of the day today on NAS 100. Now, which one broke structure? Well, I would argue that this one did over here because you had a nice support level right through here um, that actually extends even further. It was all, it used to be support right here, then it became resistance right here, then it became support right here, then it became support again. So that's a break of structure. So that's the biggest impulsive move on NAS 100 today, right? And it's also the one that created a break of structure, which is also required. So nice break of structure there. So now the big question is, this is, and again, this is a live example. This is us trying to find a trade in real time. So now the question is, now that you've got the break of structure and you've got the support, support drawn out and that's subsequently broken, now you got to find what created this move. Well, pretty much whatever orders took place inside of, I would say, this whole area right here, whatever happened inside of here, something happened today. Like whatever they decided to do caused this huge mess up, right? So this would be a good place to actually place an order to sell right there because that's trapped liquidity. And if the market had an opportunity to go back up to there, there's a good chance you'll get a pullback, and that would make a really decent day trade. Okay. So that's the whole concept behind smart money is you're looking for breaks of structure. Ideally, you try to find a change of character because those are often the most powerful moves. But don't underestimate just a simple break of structure. Those can be very powerful. But the other thing too is I would try to find the ones with the biggest impulsive moves like this one. And as long as they're associated with the break, then you're looking really, really good. Okay. All right, guys. Well, I think that's about it. Any questions? I think I'm going to go ahead and wrap up our webinar. I just wanted to give you guys a basic rundown on what we're doing when we trade liquidity and how smart money works. If you can combine this with the scanner weekly signals, I think it's very potent. So what you're trying to do is you're trying to find the overall signals of the week, and then you want to look for trade opportunities using what I just taught you in finding liquidity, to take those exact trade opportunities. So, all right, guys, well, let's go ahead and wrap up. I think that's about it. So thank you for coming. Enjoy the rest of your day, and we'll see you guys in the next webinar. Thank you. Bye.